BigBear.ai, which is ticker BBAI, has had tremendous momentum behind it over the past 12 months. Just today alone, the stock's up 6%. In the past 1 month, the stock is up more than 87%. And in the past year, the stock is up a staggering over 400% just in the past 12 months, but it is still down from the highs that they hit in February of $9.78. As of recording right now, they're down roughly 20% from those February 2025 highs. This is an AI software company with just over a $2 billion market cap, and they're being compared to Palantir almost every day. I see some kind of article relating BigBear.ai to Palantir. So we're going to talk today about whether or not BigBear.ai is the next Palantir, and I'm talking about the business behind the stock. In this video, I'm going to be talking about BigBear.ai from a long-term buy and hold perspective by looking at the fundamentals of the company and seeing whether or not there's big-time value there or if I see major growth coming in the future. And towards the end of the video, we'll talk about whether or not the stock is a buy, sell, or hold from a long-term perspective. So make sure you stick around to the end of the video for that. I won't be talking about short-term moves. I'm not going to be talking about trades with BBAI. I am a long-term investor who focuses on business fundamentals before anything else. I'm excited to get into this video, but first, if you're new here, welcome. We've passed over 8,500 subscribers. So if you're not one of those 8,500, go ahead and click that subscribe button. Help us get to our short-term goal of 10,000 subscribers by the end of the year. And before we dive into our BigBear.ai analysis, let me know in the comments below which AI stocks you're holding right now. I'd love to hear about that. All right, let's jump into the video. So BigBear is an AI software company that focuses their products on AI decision-making, facial recognition, predictive analytics, and creating and operating digital twins in order to identify and mitigate operational issues or cyber attacks before they arise. They've got AI computing at the edge with their Conductor OS product. They've got digital identity solutions through TrueFace and Veriscan. They've got computer vision and predictive analytics through their products Arcus and threat detection. They've got cybersecurity solutions that, like we said, focus on those digital twins through their products Spacecrest and Troy. They've got predictive analytics products Observe, Vane, and Orion. They've got modeling and simulation products that also use digital twins, including Dominate, ProModel, Shipyard AI, and FutureFlow RX. And then they've got enterprise automation and professional services as seen on screen now. It's a very large number of products for such a small market cap company and such a small revenue company with only 630 employees as of the end of 2024. I think it's going to be very difficult for them to keep all of those different products, strong enough products in the AI software marketplace for them to continue to win over customers and keep their existing customers happy. Now that we have an idea of what the company does and what types of products they have in the marketplace, let's check out their growth rates. We're going to look at revenue growth rates first. Before I looked at the revenue growth rates, I was expecting revenue growth rates north of 30% and accelerating revenue growth rates because we know we're in the early stages of the AI software boom. So a company that's up over 400% in the past year, I expected absolutely insane revenue growth rates. But that is not what I found. Let's check out the revenue growth rates over the past few years. I've got revenue growth rates here all the way back to March of 2022. The highest revenue growth rate they've ever recorded in any quarter since March of 2022 was 22.12% revenue growth. That's a respectable number, but I was expecting that to be the lowest number that I saw when I dove into their growth rates. That's the highest that they've had over the past many years. Some quarters over the past few years have actually been negative revenue growth rate. They had a negative 21.43% revenue growth rate in the first quarter of 2024. And in the most recent quarter, they had a revenue growth rate of 4.94%. And that's a deceleration over the last 3 quarters from 22.12 down to 8% and then down to roughly 5% like we just saw. So revenue growth rates are dropping and there's no revenue growth consistency over the last few years. So this is where the Palantir comparisons start to die pretty quickly. Not only is this a way smaller market cap than Palantir ever hit as a public company, Palantir's lowest market cap they ever hit when they were public was around 13 billion. BigBear.ai is roughly $2 billion right now. But also the revenue growth rates are in a very different spot for these two companies over the past few years. If we go all the way back to Q2 of 2020, Palantir had revenue growth rates of 40% or 50% or 30%, and the lowest revenue growth rate they ever recorded in the history of being a public company was 12.75%. That's still double-digit revenue growth, and now they've been accelerating for the past 8 quarters all the way up to 39% revenue growth. That's a number that BigBear.ai has never seen, and they're a much smaller market cap. When you're at smaller market cap numbers, smaller revenue numbers, it's a lot easier to grow at those major clips. So for BigBear.ai, the revenue growth rates are very lackluster. But as it relates to revenue, there is one thing people have been talking about a whole lot with BigBear.ai, and that's their revenue backlog. And that revenue backlog has been growing very substantially over the past few years and the past few quarters. Just in Q1 of 2025, they had revenue backlog growth of 30% year over year from 296.2 million all the way to 384.9 million. But there's also some caveats to talk about here with that revenue backlog. We got to dive into what makes up that backlog. So check it out here. We've got a breakdown here of that $385 million backlog. The funded amount in the backlog is 19.7 million. The unfunded amount is 70.4, and then the priced unexercised options and the unpriced unexercised options together make up nearly $300 million of the backlog. That nearly $300 million of unexercised options, both priced and unpriced, is part of existing contracts that BigBear already has, and if the customer chooses to exercise those options, then BigBear.ai will receive that money. If the customer does not choose to exercise those options, then BigBear will not receive that money. So $295 million, roughly $300 million of that $385 million backlog is unexercised options, non-guaranteed money that BigBear could receive if the customers exercise those parts of the contracts that they already have. Over the next few quarters, seeing how much of that backlog, specifically the unexercised options, how much of that gets converted to revenue. That's going to let us know how strong their products are in the marketplace and how much value they're bringing to their current customers. If a very large portion of that stays unfunded and does not come to fruition for BigBear, my assumption would be that their products are not good enough and are not bringing enough value based on the price that the customer is having to pay in terms of efficiencies that BigBear software is bringing to their business and the amount of money that BigBear software is helping them save or make. All right, we saw the revenue growth rates, we saw the backlog growth. Let's check out the EPS growth. Over the past 4 quarters, EPS growth has been extremely rough. In Q2 of 2024, they reported a 5-cent loss on EPS. In Q3 of 2024, they reported another 5-cent loss on EPS. In Q4 of 2024, they reported a 43-cent loss on EPS. In Q1 of 2025, they reported a 25-cent loss on EPS, and that was a 19-cent miss per share on EPS. Over the next few quarters, negative 6 cents is expected in Q2 of 2025, negative 5 cents in Q3 of 2025, negative 5 cents in Q4 of 2025, and negative 5 cents in Q1 of 2026. Making the fiscal 25 EPS estimate negative 41 cents and fiscal 26 EPS estimate negative 21 cents. And looking at Q1 of 2025, they had an increase in gross profit of 6% year over year. Their gross margin is all over the place, but specifically in Q1 of 2025, it absolutely fell off a cliff from Q4 of 2024, down from 37.4% all the way to 21.3%. That gross margin percentage is also very, very low for a software company. If we're talking about Palantir comparisons, Palantir's gross margin is almost always 80% or higher. It's very rare for Palantir to drop below 80% gross margin in a particular quarter. That's the type of gross margin we should expect from software companies who are leaders in their space, not a 20% gross margin or a 30% gross margin like we're seeing with BigBear. They also had research and development growth year over year of 264%, up from $1.1 million of R&D spend in Q1 of 2024, all the way to $4.2 million of R&D spend in Q1 of 2025. If they're going to become a leader in the space, if they're going to have the best of breed AI software, they're going to have to invest in R&D, but to see a 264% year over year increase when they only have a 5% year over year revenue increase, that is a little bit concerning. Adjusted EBITDA loss expanded year over year. They had negative $1.6 million of adjusted EBITDA in Q1 of 2024, and they had negative $7 million of adjusted EBITDA in Q1 of 2025, which was $5.4 million expansion in terms of the loss. And no investment decision is complete without a quick look at the balance sheet. So let's look at the balance sheet real quick. It's not terrible, but it's definitely not great. It's worse than I expected to see from a software company like them. They're holding more than $100 million of long-term debt. As a small cap software company with a market cap of only $2.2 billion roughly, that's too much debt in my opinion. Their cash and cash equivalents is eclipsing their long-term debt at $107.61 billion, but I'd really like to see them pay down that long-term debt and maybe have a little bit less cash on the balance sheet for a short period of time. That gets a little bit risky because they're still a money-losing company. They're expected to be unprofitable for fiscal 25 and for fiscal 26. Looking out to fiscal 27, they could have their first quarter of profitability, but I doubt that they'll be profitable in full year 27 as well. So it's going to be multiple years of taking losses still. So it's going to be very risky for them to take any of their cash on the balance sheet and pay down debt. So they're probably going to be holding on to that debt way longer than they need to be. And comparing that long-term debt to Palantir's long-term debt, Palantir has $0 of long-term debt, and they're a much, much bigger market cap, past $300 billion at this point right now. So is BigBear.ai the next Palantir? Aside from them being a government contractor and a government defense contractor that deals with AI and predictive analytics and digital twins, no, they are not the next Palantir in my opinion. As it stands right now, they have so many things fundamentally that are way weaker than Palantir has ever had throughout their entire time as a public company. The revenue growth rates are way worse, way less consistent, and way weaker than Palantir. The EPS growth rates are very troubling, way weaker than Palantir has ever had throughout their time as a public company. The position the balance sheet is in right now is much weaker than Palantir's balance sheet has ever been throughout their time as a public company. So in terms of the products they make, sure, there are some Palantir comparisons. In terms of who is paying them money, the US government, sure, there are some Palantir comparisons. But in terms of the fundamentals of the business, I see almost no comparison to Palantir whatsoever at all. Okay, so now, is this stock a buy, sell, or a hold right now? It's a very hyped stock. It's a very hot stock. We saw earlier it's up over 400% in the past year, similar to Palantir. But for the most part, this is not fundamentally driven. There has been a lot of hype around the backlog. If they can get their current customers to exercise those unexercised options that are inside their contracts right now, I will be much more interested in BigBear.ai over the next few years. I'm going to have to wait and see over the next few quarters what happens with that backlog. Is that $295 million of unexercised options, is it going to be realized? Is it going to come to fruition for BigBear? If it does, we would see absolutely insane revenue growth. I'm talking revenue growth that BigBear has never seen throughout their entire time as a public company. So there is a small chance that they're able to actually convert this backlog into revenue. And if they're able to do that, this company could become extremely interesting over the next few quarters. And as a result, the only way I would buy this company is if I treat it as a speculative play in my portfolio. And the way I personally treat speculative plays is I do not let an individual stock exceed 1% if I consider that stock to be a speculative stock. This stock does not have the revenue growth rates to support the stock price growth. They do not have the EPS growth rates to support the stock price growth, but they do have the backlog growth. So if they can get that backlog growth to turn into actual revenue, then I would be interested in owning the stock past a 1% allocation in my portfolio. Because in my opinion, this stock is inherently very risky. Not only do they have just an okay balance sheet, but also the revenue growth rates and the EPS growth rates do not support where the stock is today, and they don't support the extreme ripper rally we've seen with the stock over the past 12 months. Let me know in the comments below what you think about BigBear.ai and whether or not you own the stock currently. I'm looking forward to seeing those comments down there. If you made it this far in the video, consider checking out the Patreon. I just made a post yesterday detailing every single stock I'm holding right now, whether I'm holding it, whether I'm buying it, whether I'm trimming it, what my time horizon is with that stock, what category it fits into, like dividend or growth or value, etc. And on that list, there's 6 stocks I'm considering buying over the next few months as well. So if you want to get access to every single stock I'm holding, every stock I'm buying, and those I'm considering buying over the next few months, consider checking out the Patreon with the pinned comment down there or the first link in the description. As far as stock market communities go, it's very cheap. So go ahead and join the other 190 members we have in there. I appreciate you being here in a major way. Thank you so much. Have a great night.